What's up guys, Ben here and welcome to Motivation to Invest. September is here and you know what that means? The leaves on the trees are turning brown, Tesla Battery Day is coming up and I've got 3 great stock picks for you guys. And be sure you guys watch this video till the end for a very special high risk, high reward stock. So without further ado, let's dive in. Welcome back guys to Motivation to Invest. Before we get started, it would really mean a lot to me if you guys can give this video a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, let's get into the video. Kicking things off at stock number 3 is Rocket Companies, ticker symbol RKD. This is an online company set to disrupt the mortgage industry. But despite its recent IPO, Rocket Companies is very different from many of these other disruptive technology stocks. Many of these other disruptive technology stocks have high valuations, are unprofitable and small caps. But Rocket Companies is massively different. They were established back in 1985 and now are a large cap company with a market cap of over $56 billion. They even pay a dividend of nearly 5%, so Warren Buffett would be happy. Right guys, so just to show you some key metrics of why Rocket Companies is a very different disruptive technology company. So firstly, $124 billion for the first half of 2020 in mortgage originations. Next, $6.4 billion first half of 2020 total revenue, which is humongous. And then we have approximately 3.5 times the industry average refinance retention rate. So their customers are coming back to refinance their properties. And then we have over 20,000 team members. Like that's 20,000. That's a massive amount of people across their offices. So why invest? Accelerating market opportunity, unparalleled digital first brand, constant innovation, multiple drivers of profitable growth. So this is an interesting company. If you guys are based in the USA and you've used Rocket Companies, what's your experience been like? Did you have a good experience, and what would you say is the main difference between Rocket Companies and traditional banks and providers? Let me know in the comments below of your personal experience. Coming in at stock number 2 is Dropbox, one of the leaders in cloud storage services. Now I know what you guys are saying. You're saying, Ben, what about all these major competitors? What about Google's G Drive? What about Microsoft's OneDrive? You're right, these are big tech giants and I would normally not get in the way of that freight train. However, Dropbox is worth mentioning because it has a few key competitive advantages. The first is its first mover advantage. Dropbox was one of the first companies to use cloud storage services and be widely adopted by over 600 million users. And just as a little test, I'd love if you guys check on your phone right now and just see if you do have Dropbox installed. I check myself and I do. I have Dropbox installed. I use G Drive as well, but I tend to just use both of the free services. So comment below if you've got Dropbox installed, and it'd just be interesting to see the numbers because everybody I've asked does have Dropbox installed. And maybe it's from years ago, or maybe it's just from the use of the service, or if you've used it once many years ago and you have files on there, then you want to continue using the service. Out of those 600 million registered users, only 15 million are paid users. This means the stock has a massive upside. As people demand more cloud storage, they are more likely to just pay for some extra storage on Dropbox if they already have it installed. This means Dropbox has a pipeline already built of over 600 million potential customers. Even if Dropbox only managed to upsell to 5% of those 600 million users, that's still an increase of over 30 million users. And today, it only has 15 million paid users. And as it's a software as a service, as the revenue increases, the costs tend to stay near enough fixed. and thus it increases the profits massively. The second advantage of Dropbox is that it's a pure play cloud storage services. Yes, Google does have G Drive and Microsoft does have OneDrive, but these are small parts of their major businesses. They are not going to be focused as heavily as Dropbox is on making the customer experience amazing. And the third competitive advantage of Dropbox is that it's acquired an online signature service called HelloSign. Now, we all know the days of paper signatures are over. No longer do we have to fill out a form, scan it into the computer, attach it, email it, then they have to print it, sign it, scan it, and then send it again. No, we just go onto an online PDF signer and we sign it online, job done. HelloSign is vastly penetrating this market. To put things into perspective for you guys, let's look at the market cap for one of the leaders in PDF signature services. The market leader in PDF signature services is DocuSign, and they have a market cap of $40.92 billion. Now, if we compare that to Dropbox's market cap, we can see Dropbox only has a market cap of $8.75 billion. And HelloSign basically does the same thing as DocuSign. Yes, DocuSign may have a few more features, but it virtually does the same thing. And Dropbox also has this other business with over 600 million registered users. So you can see the total addressable market is massive. Right guys, so let's dive into the numbers for Dropbox. Now, I always get asked on this channel, people say, Ben, which platform do you use to research stocks? Now, if you watch regularly, you'll know that I use Stockopedia. And I've actually got a special treat for you guys. So if you want to sign up for the platform, I actually have an exclusive 25% off discount link, and I'll leave that below. And it's exclusive only for the viewers of Motivation to Invest. So feel free, check it out and see if it fits your investing style. I use it all the time and I personally love it. So let's dive into these numbers for Dropbox. So on Stockopedia, every stock is given a stock rank, which allows you to quickly see whether it's a good buy or a good sell. So currently, Dropbox has a stock rank of 82, with momentum of 86, quality of 98, and only value of 24. So that's quite a low value number, which means to Stockopedia, it's not great. It's not a great value stock at the moment. Share price is currently around $21 per share. March lows were around 16. Prior to the 2020 crash, it was around $18 to $20. But it's been quite a volatile stock over the past year or so, from what I can see here. Looking at the revenues, this is what's exciting with this company. The revenues have been growing massively. So we can see a 28.8% compounded annual growth rate on average. Over the past 3 years, we've looked at sales growth rate around 25% over the past 3 years. Of course, it's not profitable yet. Like many of these growth companies, they're reinvesting all of their revenue into expanding research and development and growing the business. So that's why we're not seeing profits here. However, their margins are improving. So we can see we're only on minus 4.85 now. Well, that's for 2019. Trailing 12 months, we're actually in profit with a profitable margin there. So we'll see what happens. So revenue is forecast to increase for 2020 and 2021. Net income is also forecast to increase. So they are forecasted to become profitable this year in 2020 and then onto 2021, and earnings per share. Analyst consensus. So here we've got analysts from all over the world. Deutsche Bank, JP Morgan, Morgan Stanley, Morningstar. Now, real mixed bag here. 1 strong sell, 1 sell, 2 hold, 5 buy, 4 strong buy. More leaning towards the buy from what I can see here. On the brokers, current ratio 1.24. Personally, you generally look for a business at least 1.5 to 2. So your current ratio is the short-term cash to the short-term debt ratio. So if a business has a current ratio of say 2, that means it can pay off its short-term debts at least twice. So that's why I look for a business with around 1.5 to 2. 1.24 is okay, but it's not incredible. P/E ratio 24.4, not bad for the industry, but it's still not incredible given the competition. And finally, stock number 1 on my list is Square. This is the payment services provider set to disrupt the financial industry. Founder and CEO Jack Dorsey was the co-founder of Twitter, and he's also a good friend of Elon Musk. Many say that he seems to look up to Elon Musk and has learnt a lot from him. And it seems that Square and Jack Dorsey has a mission of picking the baton and moving forward where PayPal stopped innovating. Square's probably most famous for its innovative point-of-sale services, which allow small businesses to take payments easily. But the real opportunity with Square seems to be its Cash App. This is a peer-to-peer service for financials, where you can send money and receive money from friends. This is similar to PayPal's Venmo. But that's not all Square's Cash App does. It also has a section where you can buy Bitcoins, and it's even integrating a section where you can purchase stocks direct from the app. The idea is to create an entire financial ecosystem where you will never have to withdraw your money from the Square platform. If we compare this to, say, PayPal, when you receive money in PayPal, you want to get it out as fast as possible because it's difficult to use it. So you want to draw it out and put it in your bank and then deposit it into your, say, stock account so you can buy shares. But Square says no, we'll keep it all in our platform. You can buy shares, you can pay for your groceries, you can send money to friends, you can do it all inside the app. And every time you use their services, Square can find a way to get a little bit of profit from every single customer. Another part of Square that's got me really excited is its small business applications. So apart from the point of sale, Square can actually track how much money is coming in and out of the business and thus judge whether the business requires any loans or credit to expand. This is incredible, innovative, and offers a whole new way of offering loans to small businesses. As it doesn't just make the service more accurate through the data it collects, it also speeds up the entire process because they already know the small business and they know its capital requirements. Right guys, so diving into the numbers for Square. As you can see here, it's a large cap adventurous stock with a stock rank of just 65. However, the momentum is 99, the value is 6, and the quality is 73. So great company, not a great valuation at the moment. So share price around $159 per share. It was around $50 per share in April, so you would have tripled your money if you invested then. Total revenue, compound annual growth rate of over 40%, which is incredible. Now, generally, if I'm assessing if a company is a growth company, my criteria is it's got revenue growth of at least 20%. This has over 40%. Over the past 3 years, we can see it's still over 40%. So it's not just this was a few years ago, it's still achieving this massive growth. So as you can see here, revenue is forecast to increase for 2020 and 2021 to $9.6 billion. Net income is also forecast to increase for 2020 and 2021. So you see that there. It's just started to become profitable, this business. Earnings per share is also forecast to increase for 2021. Analyst consensus, 35 brokers here, 4 sell, 22 hold, 14 buy, 2 are strong buy. So people here from Deutsche Bank, Morgan Stanley. Current ratio 1.7. That's nearly at my criteria of 2. So yeah, it's not bad. It's not incredible, but it's not bad. Now, this is the problem with Square, which will put a lot of investors off, especially those who have the sort of Warren Buffett style value investing. It's not a value stock. This is a pure growth stock, a pure disruptive growth stock, which is set to disrupt the banking industry. P/E ratio 161. Now, that is just out of this world. Extremely high, but in this world we're living in at the moment with Tesla with P/E over 800, it just seems normal. So doesn't mean the company's not got potential, as we've seen with stocks in the past, especially a lot of these momentum plays. But should this stock drop for any reason, anything that's not affecting the fundamentals, such as say bad news or something controversial, which is just a temporary issue with the company, and then the stock did drop, then that would be a great time to buy. And now for a very special bonus stock. This is one of the hottest and most speculative stocks right now. It's called Planet 13 and it's a CB company. I will be using abbreviations because of YouTube. So they not only grow and produce CB, but they also have the world's largest CB store just steps from the Las Vegas Strip. They are heavily focused on the customer experience with a variety of art installations designed to trip people out, from an LED interactive floor to orb shows and even laser graffiti. They plan to open a smaller location later this year and have free cultivation and production facilities to create their own in-house brands. They also plan on opening another store in Santa Ana, California, just 10 minutes from Disneyland. So you can trip out at Mickey Mouse even after leaving Disneyland. Now, what's so special about Planet 13 is that its Nevada store is incredibly popular and had over 1 million customers in 2019. This made up around 9% of Nevada's total CB sales. So Planet 13's vision is to replicate this hugely successful business model across the entire USA. Right guys, so let's dive into the numbers for Planet 13. It's clear that Planet 13 is an interesting company and their Nevada store has proven the business model. However, there's still a lot of speculation attached to this stock, especially with the ongoing health crisis and possibility of a second wave. Would you want to be in a massive store surrounded by people when there is a major health crisis? So that's just something to be aware of, but let's dive into these numbers. Stockopedia puts this as a speculative mid-cap and also a high flyer, so similar to what I originally thought. Stock rank of 75, momentum of 86, value 33, quality of 75. So share price today, you're looking around $4 per share today. It was around $2 just in July. So it's doubled in price due to all the exuberance behind the stock. And it was around $1.50 around April. So this is what's classed as, say, a penny stock. It's a tiny business. They've got one major facility and, of course, their production plants. But the revenue is incredible. So the growth over the past, obviously, few years, 277% compound annual growth rate on the revenue. So, of course, they're thinking to replicate this business model across the rest of the USA. So as you can see here, revenues forecast to increase, near enough double for 2021. And again, net income's also forecast to increase massively, as is earnings per share. Two brokers are analysing this stock, well, three apparently. Small brokers from what it looks like. 2 buy, 1 a strong buy. Current ratio 1.74, good, not incredible, but still good. PE ratio 83, so yeah, the valuation's high. Of course, if they can pull it off and replicate this business model in California, then that should do a massive amount for this business's revenue. But this is a risky stock, so even more so than many of the other stocks I've mentioned on this channel, if you're investing into speculative stocks, don't invest any money which you can't afford to lose. This does have a high risk, but there is potential for high rewards. So it just depends on your personality and your investing style. Overall, the stocks I mentioned on my list are innovative growth companies which are set to disrupt an entire industry. The favourites of mine include Square and Rocket companies. Although I haven't purchased shares in these businesses yet, I've definitely got my eye on them. So which is your favourite growth stock on this list? Let me know in the comments below and I'll join in the discussion. In addition, if you guys enjoyed this video, I would really appreciate it if you give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock market picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.